In this video, I'm going to explain how to use open interest in your trading strategy. Also, I'm going to give you a cheat sheet on how to interpret open interest, and also I'm going to explain you how to interpret it yourself. Also, we are going to discuss what's open interest. So, before going into the video, I want to encourage you to follow me on Twitter at trading_soldier, and here I mostly post daily updates of my trades and also my views on the market, my trading ideas. So I encourage you to follow me for a more direct approach and for a more close relationship with you. And before going into the video, I want to tell you that I make a blog post in my website, trading-soldier.com, and this video is based on this article that I post on my blog. So if you go here to my blog, in my website, trading-soldier.com, you go here in the last blog post, or you type in here blog, and you go directly to the blog. You can see this article, this last article, and if you click in the article, you will see this content that I'm going to discuss in this video, but more in a text format and also more in depth. Here I as I said before, I explain all these points regarding open interest, and also I give you this cheat sheet that will go in depth later in this video, where I explain easily a way to more visually to interpret open interest and apply it in your trading strategy, or at least have it as an indicator to, let's say, position your bias in the market. Also, I give you live examples that I found in the charts, and I explain why these examples are relevant and how to interpret it regards open interest. So as you say here, we are going to discuss these examples later in the video. So first of all, what's open interest? So open interest is a way to measure how many contracts are open in a market. So we can say that open interest, for me, based on my personal opinion, open interest is more like a sentiment indicator. Because if we see that open interest is rising in a market, we can think that a lot of people is opening new positions. And if open interest is decreasing in a given market, we can trade Bitcoin, Ethereum, Polkadot, Monero, however we are going to trade, we can interpret that open interest decreasing is that people that are closing their positions, so there are less interest in the market. So how to calculate open interest, in the blog post is explained very well and very resumed how to calculate it, but I think that is not the objective, the target of this video, to explain this. And the most important thing that I publish in the blog post and also in the video is this cheat sheet that I give you. Okay, as you can see here, it's very simple to interpret this data. As you can see, if price is up and open interest is up, it means that longs are entering the market, so we can consider this as a healthy uptrend. Also, we have the other case, we have 4 cases, as you see. The other case is that when price is up but open interest is downwards, we can see that shorts are closing positions. I will explain this later in the charts. And also when we have price going down but open interest going up, that means that a lot of short selling is entering the market. And also the last case scenario is when price and also open interest are going down, and that can mean or may mean that longs are closing their positions. So going to the charts, here the tool I'm using for this video is Coinalyze. It's a completely free tool that you can go and to coinalyze.net. You can create an account here, free. You also can buy a premium subscription to delete all these advertisements that the website used to fund the operation, but you can use it completely free. You here have your profile and you have your charts. You select the charts you want to use, and you can change and plug in your indicators. For example, open interest, as I said before, is just an indicator, and you go in the indicators tab. Here you search for open interest, and you have here open interest. I like to use open interest stablecoin margined contracts because I trade short-term derivatives data, so I prefer to use stablecoin margined contracts because they give a more precise insight of what's happening in the market. So let's say, as I said before, open interest for me is just an indicator. I want to make clear and to explain you that open interest cannot be used alone as a holy grail of trading. As you see in Twitter and YouTube, there are a lot of people that talk about open interest, but open interest is just one piece of the puzzle. You cannot base your whole trading strategy just on open interest. So as I just said, it's just an indicator, and it should be treated just as an indicator, and you should be searching for confluence with other indicators, and as always with price action. So as you have seen before here in the cheat sheet, the two variables we are going to have to base our trading strategy based on open interest is price, always price action, and open interest, to make a matching and a comparison between the two. So let's get into the charts. I also want to say that open interest indicator is more useful if used in combination with the liquidations indicator. So also you can go to coinanalyze.net, typing in indicators liquidations, and you, for example, I use liquidations stablecoin margined contracts. So you go here, you can see that liquidations are charged here, and with price action, open interest, and liquidations, we can have a very whole picture of what's happening in the market right now. So for example, let's go into the price action of the last days. Also, I want you to know that open interest for me has an edge in lower time frames because market is changing very quickly, and you need to have, for open interest to be relevant, you cannot use open interest in a 4-hour time frame. I prefer, and I think that is more precise and accurate, to use open interest in a 5-minute chart or 1-minute chart at the most. At the maximum, 15-minute charts. So we are going to make a little bit. Oh, the chart broke here. I don't know why. The candles are appearing so bad here. Okay, now it's loading well. So let's see here. For example, we can see that the price action in the last hours, here there were a lot of traders that were, in my opinion, trapped, because you see price is flat. In this moment, people, there's not a trend, so they are betting if the price would go up or down. So there was a lot of open interest entering into the market, and we see that the price suddenly corrected with a downturn, with a down movement, and we see a lot of long liquidations. Here in the liquidations charts, you can see that the blue lines pointing downwards are long liquidations, and the white lines pointing upwards are short liquidations. So as you see here, lot of long liquidations. I want to make clear that liquidations means forced closed positions, so people that are liquidated, or people that are closing their positions in advance without getting liquidated. But it's the same for this chart, is the same principle. So as we see here, for example, let's take one example that I explained here in my blog post. For example, this example, where there are a lot of short liquidations, where the price go up, is the example number 2. So go to the example number 2. Okay, here. This example number 2, for example. Example 2, price increasing plus open interest decreasing, shorts closing. So as we see here, price, let's zoom in. As we can see here, price begin to rise and open interest begin to decrease. If we go to the cheat sheet here, open interest rising and open interest decreasing is shorts closing. Closing, as I said before, means closing forcefully. They are forced to close their position by liquidation, or they are closing because they see their stop loss or their position at risk, or they realize that they are wrong in their trading strategy or their trade that they have entered or they wanna enter. So as you see here, as soon as the price go up, open interest begin to drop. This is because a lot of traders close their positions. And also you can see here in the purple rectangle here, you can see that a lot of short liquidations happen at this point. So this means that this move up caused a lot of shorts closing their positions. And you see, after this, open interest begins to rise again. I don't know why the chart is looking so bad. Maybe, I don't know why. Let's refresh the page because the candles are not printed as they should. Okay, now it's much better. They are more much better. Okay, so let's search for the example number 2. Okay, here. Okay, as I said before, when the price goes up, suddenly liquidations, short liquidations appear on the liquidation chart. So we can assume that the price is hitting those stop loss or those liquidation levels that the people, there are a lot of traders that are betting the price to go down of Bitcoin. And we see that after the liquidations, the open interest drops, a big spike, but this is a candle that also can be an error for the data source. And then the open interest begins to rise again. So a lot of people that got liquidated here or other traders begin to short that top, and we see that price immediately rise again and hit those stop losses. We can see here that the open interest printed a bearish candle, a big bearish candle that drove down the open interest to almost the same levels as before the last pump. So we see the first pump, a lot of short liquidations, open interest also decreasing following these liquidations. Then all of a sudden open interest begin to rise again. So the price, the people, the traders begin to short again this upward, this upside movement, and then path. All of a sudden, big bearish candle and also big short liquidations. So what does this chart tells us right now? The chart is telling us that a lot of shorts are positioned in the market. A lot of people are betting that the price is going to fall down. So maybe by a manipulation, maybe by a large player that have buy in market price, maybe because of large spot bidding. We don't know exactly in this case, because I don't want to overload my brain with a lot of data when I'm trading, because I think that trading is, the more simple you make your trading strategy or your trading system is, the better. So any information that is, or any piece of data that is most that you don't need is doing more harm that is going to help you. So this is my system. Everybody has his own system, so I don't want to interfere with that. So let's go back to comment to the chart. So as you see here, when the price rose again, lot of open interest were closed, and also the liquidations confirms that a lot of shorts were hurt in this pump. So this is the first example I want to discuss with you. The second example, for example, we are going to go here. I don't remember it. This was the third. No, this was the after. Okay, the first example. For example, today we have a lot of open interest going into the market. As right now, we are seeing the Bybit chart. So as you see, the price is going down, but open interest is going up. What this means? Okay, we have the doubt. We go to my blog post and we see the cheat sheet. So we go here and we see that the price going down and the open interest going up is shorts entering the market. So for confirmation, we can see here that effectively the traders are betting, are increasing their positions, are selling their contracts, and as you see here, only longs are getting liquidated. Here you see the blue lines pointing to the downside. There are longs that are getting liquidated by this downside move, and also the people, as is normally, the traders want to make profit on these moves of Bitcoin, so they are increasing their short positioning to buy the contracts and sell them later. So this can drive to two outcomes, as I say here in my blog in the example number 1. Yes, example number 1. Yeah, that is the same that we are discussing here live in the live chart. So if we go here, you can see that the first outcome that you can expect from these movements in open interest and price is that shorts are leading and sell pressure is high. So the price falls even more, causing more longs liquidations cascades, and this causes the price to fall even more. As you know, in derivatives trading, for every buyer of a contract, it needs to be a seller on the other side, and vice versa. So this is the whole base of open interest. So what I mean by this first point that I just discussed, this is because with more people entering shorts, the selling pressure on these contracts derivatives are increasing. So it can lead one to a short squeeze. That is the second case scenario that we have here. That if a lot of people are shorting, so you see that the price is going down but open interest is going up, we see with the cheat sheet that is shorts that are entering. That means that a lot of traders are shorting here. So if I short, for example, here, let's say my reservoir tool. Okay, I open a short position here. Okay, I open a short position. I'm shorting here at the bottom of this movement. So my stop loss will be, for example, at this volume node here. So as you can see here, we are going to zoom out the price. All these people that are shorting, because we have the confirmation that they are shorting, because no shorts were liquidated here with this movement, because the price went down. The open interest is just increasing exponentially. It's parabolically up, and also you see that people is getting wrecked. Longs are getting wrecked, so the stop losses are getting hit. So if we go here, we can see that if we short following the theory that everybody, 99% of the people follow when they are trading in the market, my stop loss can be here after these hikes, after swiping these hikes, or also if we have a worse risk reward ratio, we can put it here, or also there are people that put it here. But the whole concept of this open interest thing is that now a lot of orders are sitting at this point. So the price, maybe a large participant, a whale, an exchange, demand, supply and demand, call it whatever you want, but price here in this precisely point of the chart and this precisely level is very likely to reverse, because we can see here a double bottom, one swipe, a pink candle bar, then another swipe of liquidity, another pink candle bar, and then open interest is also following an uptrend. So the most, let's say, predictable or probable way that this will end is here with a short squeeze to the upside. We can view this as, you know, for me charts are like art. So for example, if I see one thing, you can see other different thing, but for me it's this way. I use it open interest this way. So these are the examples that I want to discuss. I don't want to go in much depth because I just finished to write this article. I think this article is very well explained, and I think you should go to my website, read this article. This video also is very educational, give you a lot of insights. If you prefer to listen and to watch a video rather than just read an article, this video is for you. I give you the basics, and this is the basic of open interest. So for example, going back to the open interest trading strategy, for myself here, the short trade will not make sense to make a short trade here, because the price action is telling us that just made a double bottom here. In my opinion, you know that price is trading is all about probabilities. No one is 100% right in this market, but if I had to enter here, I will enter with a long trade. I will open a long trade, okay, long position. I will put my risk reward to the next POC, for example, and I will put my stop loss right down before the last liquidity swipe, and that will be one way to use open interest in my trading strategy. As I said before, you need to combine open interest with price action, first of all, because it's the most important thing for me, and also horizontal levels. You can use order blocks. You can use, for example, here volume nodes on the VPVR, volume profiles, based on volumes. And you can, for example, make an idea that if all this way comes down, the price, there are a lot of order blocks, a lot of imbalances, fair value gaps that are left behind, that needs to, in theory, needs to be rebalanced, all this price, and we can take advantage of this position to make a profit when the price or the market decides to rebalance all these areas that are, let's say, untapped liquidity. So that's it for the video of today. I don't want to make it more longer or confuse you. If you want to get more in depth, as I said before, you have here the article. Here is well explained. You can read it no matter what times you need to read it, and also you have the examples. And as I said before, I encourage you to go to coinanalyze.net, open an account. It's completely free. I don't get any money from this. I don't get any paid referrals from them. It's just what I use. I use TradingView for my daily trading strategies, and for other indicators, as you see here, I'm using other indicators, other charts, and also I use CoinAnalyze. You can also find open interest in, for example, Trading Light, that are a very well charting platform that you maybe are using or you are paying. You can use it. I have a referral link in my website. You can go here in my blog, and at the end of the blog you can see my Trading Light referral link and my TradingView referral link. I don't mind if you use it. If you don't want to use it, it's fine also. As I said, I use CoinAnalyze completely free, no referral link. You can sign in, creating an account with just your email and a password, and you don't have to pay for anything. You can see the same charts I'm seeing here and trading the same pairs I'm trading here. Also, you can discriminate by exchange. You can go to Binance or also Bybit, OKX. As many exchanges as they are taking the source of the derivatives data from these exchanges. And also, I for the time I'm using CoinAnalyze, I can say that they are pretty precise. I trust their data that they gives. For example, open interest in TradingView is not that good as CVDs, as many other. You can also don't have the option to, let's say, filter with stablecoin margin contracts. You go here, open interest is just open interest. But in CoinAnalyze you can filter the data. As I said, you go here and you type open interest. You can also make the inverse perpetuals or the open interest delta. You have many options here. I use this, is my preferred option. So thanks for watching the video. As I said before, please follow me on, please, if you want. If you don't want, don't do it, because I think that in Twitter is the social media that I'm most active, more than YouTube and more than other social platform, because it's a quick social media. I post here daily updates on my views on the market, on my charts, on my trading results, when I fail a trade, when I make profit in a trade. I post my setups, my ideas on the market, also news that can influence the market, or my thinking on the market, my views, my ideas, my opinions. So if you find this information valuable and you want to follow me and also learn with me, because as I say here, I'm not a master, I was always a student. So no trader is whole 100%, so we are learning here. We're trying to make profit of the markets and do not get wrecked in the process. So thank you for watching the video, and we see you on the next one.